I want to be very nice and respectful to the Fed. You're not supposed to criticize the Fed. You're supposed to let him do his own thing. But I know much more than he does about interest rates, believe me.
Boom! Welcome back, ladies and gentlemen, once again for another jam-packed daily market update where we don't just tackle the cryptocurrency space, but the markets at large. That's exactly what we're going to be doing in this video. I want to start off with that clip. Something interesting coming out of Trump yesterday. Right now, there's a bit of a battle going on between the White House and the Fed. The White House want lower interest rates. This has been reiterated by Trump, Scott Bessent, etc., etc. And they think it's an appropriate time due to where inflation is. It's around about 2.4%. Their target is 2%. Interest rates are at 4.25%. And they're also seeing some weakening stats. And of course, Friday on non-farm payroll is going to be interesting to sort of look at the US economy, certainly the unemployment data, which has a correlation with assets. But I actually am more on the side that the Fed should go steady, but progressive, not just don't do anything. And that's a paradigm that the markets have to deal with. And that's why I wanted to sort of start off with that clip. And also related to that clip, there's a lot of rumors circulating, as there always are, on Twitter or X as it's now known, and social media generally, you know, other content creators covering the fact that the Fed are likely going to cut rates in the next meeting, which is exactly 7 days and 6 hours from the time of recording away. So this is taking place on the 7th of May. It's the 1st of May tomorrow. This year is flying by, isn't it, guys? Never a dull moment in the cryptocurrency space. So much has happened this year in the cryptocurrency space. It's kind of hard to summarize it all in a few sentences. But the probabilities of them lowering rates in the next meeting are 92.4%, according to the CME Group FedWatch tool, that they're actually going to keep rates where they are. I think they should be progressive. So I think they should be lowering rates. They shouldn't be doing it hastily, I don't think, because that shows a kind of obedience to the markets and can cause or give not such great signals. And the markets are looking for signals, and there's been this kind of unwillingness to give much forward guidance or even a clear path from the Federal Reserve. They have on their dot plot, which is where they project where rates are going to go, got about 3 points, I think about a point, so 1% reduction in rates over the remainder of this year, so by the start of 2026. That would see, you know, that could come in the form of 25 basis points, 150, 25. I don't really know. But they are going to lower rates, and I do think this is going to support markets. And if you look at what's happened with the European markets, certainly the likes of the DAX as an index of European Stock Exchange, they've done very well and better than the US markets. And I think that's due to monetary policy. So this is still something the markets have to contend with. We're at very restrictive territory. I'm bullish on the fact that that can be undone and should support risk assets. I think there's a bit of a kind of interesting scenario going on with the Fed and, of course, the White House. I do think the ultimate resolve is low rates, continued money proliferation, whichever way this works out. So I want to start on that, but we've got a lot to get into. We know there's about 73 ETFs waiting approval. And yesterday we got news from the SEC that we're going to cover. It's not so positive in the sense that many ETFs have been delayed, but we'll look at Eric Balanchunas' take on this. He's giving odds on what ETFs are going to be approved. We'll take a look at that. Then I want to talk very briefly about UK crypto legislation. You know, the UK is striving to become the crypto hub and the real success in this industry. I don't think the UK is capable of doing anything right now. Go to any major city in the UK and take a look around. It's unbelievable. It's not like Europe. I mean, Europe's kind of parts of Europe are on a similar trajectory. But if you you can still go to unbelievably beautiful and stunning European countries, and they are kept well. Go to pretty much any city in the UK and go and take a walk around the cities. You'll be shocked with what you find. There are probably a few exceptions. Edinburgh is an amazing city that probably is still, well kept. Anyway, we're getting way off topic. So we're gonna take a look at that, and then I want to go back to the whole US government buying Bitcoin, and actually the global arms race that we're about to see in relation to Bitcoin. My play on that is miners. As an investor, we're going to listen to what Coinbase had to say about them buying $100 billion worth of Bitcoin soon and how they do that in a budget neutral way. And then we'll listen to what Bo Hines had to say just yesterday in regards to this kind of space race. Refer there to obviously getting to the moon. Whether you believe we did get there or not is for an entirely different discussion. But what they're looking at there is the first person to get space, whether it was Russia or the US, we're likely going to see something take place with accumulation of Bitcoin. And I think if Bitcoin does serve as this global store of value that's recognized everywhere, that very much could be the case. And then we'll finish things off on some technical analysis. So we've got a lot to get into, guys. Let's dive into it all. SEC decisions or delays decisions on these today. Franklin Templeton's Sol and XRP ETF, Grayscale's HBAR ETF, Bitwise's Dogecoin ETF, staking in Franklin and Fidelity's ETH ETFs, along with Franklin Crypto ETFs. In-kind creates and redeems on Invesco's Galaxy Bitcoin and Ethereum ETFs. I still think this will all happen this year. And you can see a lot of this has been denied and delayed till the 17th of June. Now, we saw this with the Bitcoin and Ethereum ETFs. They were delayed initially and then approved. And it seems a little bit contrary that they delay these ETFs given the stance of the new SEC, obviously headed up by Paul Atkins. I don't think they want to rush these, and I think they're waiting for something. Maybe it could be, given this presidential regime, it could be something along the lines of a dip in the markets or something more broadly. But these are coming. Eric Balanchunas gives us his update. Would love to hear directly from Atkins, but all good chances of happening. Here's our latest odds of approval from all the different spot ETFs. Despite what came out and them delaying things, it's a delay, it's not a denial. You are likely going to get an approval of all of these, I believe. Perhaps they're waiting for BlackRock to file. I think one thing you are going to see, which is a very bullish catalyst, is BlackRock file for an XRP and a likely Solana ETF. I do think that's coming. But if we look at his odds here, we've got basket indexes. So there's a 90% chance of approval in 2025. The interesting thing is we do a lot of work on crypto products like Grayscale's Digital Large Cap Fund. This is in a clear uptrend. We've got higher targets for it that we've had since down here. And this is a continuation pattern. In line with the continuation patterns we're seeing for the space broadly. Let's get back to it. There's a 90% chance of that. We've got Litecoin, obviously filed by Canary, Grayscale and CoinShares. There's more positivity here than not. Does the SEC currently view as a commodity? Yes. CFTC regulated? Yes. 90% odds of this. Solana, 90% of. XRP, 85% odds. Dogecoin, 80% odds. Cardano, 75% odds. Polkadot, 75% odds. HBAR, 80% odds. And Avalanche, 75% odds. So I believe you're going to get all of these this year. It could be in June. We could have a ETF summer. It's just a matter of when, not if, at this point. And a little bit of other news that's came out over the past 24 hours is UK drafts crypto legislation. Foreign stablecoin issuers don't have to be regulated in the UK. I think we are looking at Brent Johnson's dollar milkshake theory, which is a good theory for anybody that's wondering how fiat currencies play out. And I think stablecoins play a massive role in enabling that and dollarizing the world, and they're going to do this. And I'm very heavily invested in protocols that I believe are going to enable stable coins and this evolution of money that we spoke about yesterday. What I want to do now, guys, is actually dive over to Twitter, and I want to look at what an individual from Coinbase said about how the United States is going to buy $100 billion worth of Bitcoin. We're going to relate that to what Bo Hines has to say about this space race that is about to kick off and is already underway. And then we're going to talk a little bit technically about the markets that are pulling back slightly, but I think it's very normal. I think there's still a lot of uncertainty out there in regards to the broader markets and some of the things that we covered like at the start, what the Fed are going to do. But I am way more optimistic than I think, and we have been throughout this pullback than the vast majority. And I think you have to take that stance when it comes to markets. Certainly as an investor, you kind of are already inherently a glass half full kind of individual because you're investing in something with the prospect of it going up. Anyway, let's kick this off. This is what Coinbase had to say yesterday about the US buying $100 billion worth of Bitcoin and how they do that. We'll look at what Bo Hines had to say, and then we'll finish things off with some price analysis.
How the government works to understand why, or rather, how they might revalue gold and buy Bitcoin and yet be budget neutral. So let me walk you through it very quickly. So today, because of law, the US government still values gold that it holds in Fort Knox at $42 and change, right? Now, if they were to just mark that to market, so it's worth probably an incremental $900 billion to $1 trillion, right? Now, if you look in the public press on Twitter, most people suspect it will revalue it and then sell some gold to maybe go buy some Bitcoin. We don't think that that's the most likely case. We believe it's most likely that at some point, it could be this year, they will go and change it such that they will revalue gold to current market pricing. That would create a mark-to-market gain of $900 billion, right? And if you look at, I think the Senator Lummis bill was calling for buying, I think it's 1 million Bitcoin over 5 years. Well, that's $100 billion, if I have the math right. So our back of the envelope is that when the revaluation occurs, that creates a $900 billion, given today's market price, mark-to-market gain, which then is money that the Treasury could then take. And then the Treasury would be able to use that money in the sovereign wealth fund in a budget neutral manner to go and buy a variety of things, we think probably including Bitcoin. And just to think about the math, $100 billion of $900 billion doesn't sound like that much. But the asset is about a $1.8 trillion asset. And if we go from no longer selling, right, which we just did, to here's a way by which we can actually take on a meaningful position, it's hard to see a situation where other governments don't feel compelled in some way to measure up.
And
right?
then you have this arms race, as it were.
Well, you know, I think that we made it very clear in the way that we structured the executive order that we recognize Bitcoin as being unique. And we've said repeatedly that we view Bitcoin as digital gold. And a question that I get from journalists all the time is, how much do you want? And I think that's really a silly question. That's like asking any country, how much do you want of any asset with intrinsic stored value? You want as much as you can possibly accumulate. You know, there are stipulations in the EO. We must do this in budget neutral ways that don't cost the taxpayer a dime. But as the president likes to say, we have a lot of high IQ people in this administration, specifically over at Treasury and at Commerce. And I'm very confident in the leaders in those buildings to come up with extremely creative ways for us to accumulate. And we're very excited about that. And certainly we want to move as expeditiously as possible to do that. You know, I think that there is definitely a sort of space race as it pertains to accumulation of this asset, no different than there is with gold, right? So we're very excited about it. I think one thing I'd like to point out too about that executive order is that we recognize the other ecosystems that exist. And that's why we have the digital assets national stockpile as well. You know, we want to encourage innovation in other spaces in the industry, but I think it's really important that we do recognize Bitcoin for its uniqueness. And like you've described, it's a finite asset. It's a commodity, not a security. It has the immaculate conception, as David has said, and that intrinsic store value piece is there. It's been well adopted by the marketplace at this point. So, you know, I feel like we're well on our way. I think we positioned ourselves to be, you know, the Bitcoin superpower of the world. And, you know, we're going to deliver on the president's desires as it relates to that.
Interesting. I wanted to get that in there because it's a real fundamental driver for the space as a whole. It's just still crazy to me that all this is happening. He also mentions more broadly digital asset stockpile, and it's going to be interesting to see how things unfold. And the crypto space has largely been driven by retail speculation with a sprinkling of institutional involvement, really to manipulate retail. We're now entering mainstream adoption for the cryptocurrency space at large, and we're going to start seeing real world usage and utility of this technology. I couldn't be more bullish. There's no way that I could be more bullish, even in an imaginary world, in comparison with the reality. I mean, the reality of the situation is just that damn good, guys. That's why we get peed off when we hear people moaning about being in the cryptocurrency space. Go elsewhere. You know, investing in crypto should be for everybody, but some people simply can't handle it. Relating all this to the charts, you know, we looked at Grayscale Digital Large Cap Fund a minute ago. When it walks, talks, and quacks like a duck, it's a duck. Bitcoin's got continuation ahead of it. We're personally looking at about $306,000 for Bitcoin. We think it gets to 150 before that, of course, logically. But we've been spot on about this since we entered the markets back on the 5th of January once again. And we believe we're going to continue to do so. In the short term, really all Bitcoin's done is just ran into resistance. You can see this was support on a number of occasions that you've ran into. You're bumping your head on. I think this is going to be a puny little right shoulder that's going to catapult you to the upside. You've also got a double bottom here. You've got this falling wedge. Do become a patron, by the way, guys. We're releasing courses on falling wedge, which is very timely given what's taking place. We'll show you example after example of textbook falling wedges that appear in the markets that you can capitalize on yourself as an investor and a marketer. So that's really it from me, guys. I want to love and leave each and every one of you on that note. I think the cryptocurrency space could have a more positive day today. So much fundamentally bullish things taking place, even though the ETFs were delayed originally, or now delaying till June is actually not such a bad thing. They're going to be inevitable, in my opinion, along with everything else that we've spoken about. And I do think sort of talking macro, the Fed still has to lower interest rates. They can't really do that right now, I think, with the bond market, but introducing that bar in the form of stable coins, Tether, if it was a country, would be the 7th largest in the world as it relates to purchaser of treasuries. You know, all these things are to come to pass. That's it from me, guys. Have a smashing, wonderful Wednesday, and I'll see you all in the next one.